Hey, this is Warren Howe. We are back with another week of Looms. So I hope you saw the other video earlier, right, this week, where we were talking about seeking alpha, finding value. And this was the example that I want to give in terms of seeking alpha for our portfolios and actually using that benefit of having a 30-70 portfolio, right? So a little bit about that 30-70 is that 30 is actually focused on shorter term plays, thematic plays, trading, where we actually, we want to seek alpha. And how do we seek alpha is basically by looking at opportunities, grabbing on them, looking at momentum, and just trading off for some gains so that it can actually have an impact on the overall portfolio, right? It could be just, our job as fund managers and, our job as retail investors, or actually, a benefit of our own portfolio, our own net worth, is to be growing and allocate capital, right? So how do we capital is actually be gaining on that momentum on certain trades. So that is the 30%, and we can actually use that as cash. We can actually, funnel it back into the 70% to have on our longer term plays. So these are the ones that are, asset, inflation proof, right? In a way, because to one of the ways that we can actually tackle inflation is high growth, high assets, right? Growth in assets, so high growing companies. So I was sharing this in the Discord group the other day on how do we hedge, what is our 30-70 portfolio, what are the benefits. So seeking alpha is this, right? So I want to give a little update on the market right now. And this is not a full coverage. This is sort of, what can we make out of the energy crisis, the electricity crisis in China, and more of the supply crunch. What are the commodities that are actually benefiting from that, right? So we have to understand the core, the core reason why is China acting like that? What caused the electricity crisis, right? So the backlogs and the delays of because COVID shut down factories, right? But this is not a financial crisis. So the actual demand is actually getting more and more, where the supply, because factories close down, the supply cannot keep up. So in a nutshell, when the demand is actually stronger and stronger, especially in 2021, it caused factories to have maximum capacity, right? Maximum output. The need for electricity is actually more and more. We're talking about welding. We're talking about burning, raw materials to a certain degree, like 1,000 degrees, to make that product. Those usage, right? Factories especially, is getting more, right? So what actually produces electricity is running on, carbon, right? It's a mixture of gas. We got coal, we got hydropower, nuclear, wind, solar, right? So the point is, why am I bringing this up? Is because we can actually capitalize on these, right? What if, let's say, there's a shortage of a particular, raw material or resource, then what will benefit from there, right? That's the reason why ONG went up, oil and gas companies, because uh, coal prices eventually went up because there's a huge demand on electricity with low supply, right? So coal is needed. When coal is needed, coal prices go up. When coal prices go up, China actually recently just give a not recently, I mean a while ago, they capped the electricity prices that companies can make, lowering the profits for coal mining plants, right? Coal plants. So but with rising coal prices, they can't. They will have to shrink their margins, right? They're earning lesser than usual, so they'll either have to, shut down their factories, or actually giving a lower output, to be producing, because they don't want to be, running at a loss because of high soaring coal prices. But the point is, other than using as a fossil fuel, 61%, which is gas and coal. Other than using coal, we can actually use gas to produce electricity. But that is where, companies, ONG companies that are dependent on that, actually they are benefiting, right? So a supply crunch here could be benefit. It could be a benefit for other commodities. So when electricity demand is up, the price of coal is up. And the government, they strictly want to control electrical prices, leading to coal mining plus shutdown. What can we gain from here? Basically, energy-related sectors, ONG will be going up. That's why you see that huge run-up, right? If you go to Finviz, you go to, the energy sectors in comparison with other sectors, energy is number one now in past 2 months, right? Past 1 month because of this. Yep. So what are we doing to be hedging our portfolios? What are we doing with that 30% to be grabbing and seeking alpha? This is what I mean, right? So we actually can eventually trade on, it could be a thematic play trend. It could be a short-term momentum play, right? So what are we doing for short-term gains? Yep. So 30% of the portfolio is reserved to trade and go on thematic, especially on a sunset sector that I personally don't like, right? That we could actually trade off this. And global outages will affect supply chains, especially towards the end of the year, right? So do not take this electricity crisis lightly. This will eventually cause a ripple effect, like how shutting down factories during the pandemic is creating a ripple effect right now on commodity prices, right? Tin, all the sorts of commodities are all going up, shooting sky high. Silicon, right? So, why am I saying this is because this will affect earnings, especially companies that are, related with factories, production, manufacturing, right? That require huge amounts of electricity. This will delay their production and actually have a huge effect on earnings, right? So do not take this lightly. And that is why we see at a macro view level, how we're going to position ourselves and strategize, our portfolios, right? So surge in demands for imports is needed to keep up with supply, right? Coal imports, China, right, will be depending more on coal imports because of rising prices and other sources to be keeping up with, the electricity to generate electricity, right? So global energy drought and yet again rise in commodities prices. Now, this supply crunch, what did it benefit? In 2 months, silicon rose 300%, which is insane. So what are the companies that are actually an indirect beneficiary of rising silicon prices, right? There's some in Malaysia, there's some in the US. What are the companies that you guys have found that can be benefiting from this, right? So this is what I mean by seeking alpha, right? Making information known to us, right? Following up, keeping up in the market, following up what is happening. How do we play off that? How do we capitalize on that? These are actually strategies that we can use. And that 30% that I've been talking about, we can actually do that, right? And companies are facing supply chain and electricity issues from production expected to be slow. So the 70% for the long term will probably be affected depending on what companies that you are investing in. But that's why we got that flexibility, right? So I hope you got some value out of this today, understanding a little bit of what's happening in the market, how we're going to capitalize, and I'll see you in the next one. Thank you.